Hey, what's up, everybody? So, I just want to go over my watch list today, kind of give more of a thorough breakdown of what my trade ideas were for today, the news, the high impact news that came in at 8:30 today, and kind of how like all of these ideas correlate into each other. So, the first asset that I'm typically starting off with is S&P 500. So, I'm coming into the day, price actions above my daily anchor VWAP, so I'm looking for long entries today coming in at 8:30. But the main thing also, if you see this little red line where I have kind of right here. So the main things that I'm typically looking at or that prevent me from getting into trades are high impact news. High impact news could be, anything relating to GDP, which is the gross domestic product, or CPI today, the consumer price index. What those reports are typically a consensus of whether people are buying goods and how the consumer, which is me, you, how we're consuming products, like how much money are we actually putting into not this market but the overall market as far as the US goes. So it's a high impact news report. So then how I use that into my fundamental trading bias is it prevents me typically from getting into trades because it typically pushes in a high volume of money or liquidity. So this huge bar, what it typically does, it displaces a whole lot of price action, and it'll typically start taking out highs or lows. In this case, it took out the Asian range low. Now, I didn't really get into a counter trend entry, counter trend trading towards my daily anchor VWAP, which like I said, it gives me my bias for the day. I don't have enough back tested data to tell me that I can be profitable trading counter trend entries just yet, but it's still also good for me to mark them up, to practice, to look at price action, to see how all these different variables are in play so that when I do actively start putting money onto it, I can put a risk profile on it, meaning I know how much of my account I'm actually risking, and it prevents FOMO, fear of missing out. So, like I said, at this point for me, 4 to 5 years doing this, I really don't get FOMO anymore because I'm comfortable with dealing with my back tested data that I will be giving out to you guys in the near future. But for right now, like I said, I'm still building the content and I still want to make sure I'm putting out some quality stuff to y'all. So, no trades today on S&P 500. We pretty much start going down or price action starts going bearish, counter to where I'd be wanting to trade to. Same thing for US 30. Price action, I'd be looking for longs as price actions above my daily anchor VWAP, but price action pretty much starts coming towards it. So the two things on my watch list today was GBPJPY and USDJPY. If I can't find it, there you go. It's pretty large. So my daily anchor VWAP is right here. Price actions above it. So I'm looking for bullish breaks of structure, or I'm looking for price action to go higher than previous points in the past. So here at 8:30, this was news. Let me go ahead and try and annotate that. Which means I'm not looking to basically put any trades in the market until after this 15-minute bar closes. After that, that's when I'm typically going in to look for entries. But for right now, I'm flat for today. I don't have any entries today. I was looking for long entries on GBPJPY, but we're getting closer to 12 p.m., which is typically when I'm off the charts and when I'm closing trades or when I'm taking partial entries off the trade. Now, rather than being binary with my trading style and still getting in based off of my statistics, I know when the best time to get into the market and when to get out of the market. fundamentally, price action doesn't really move all that well for JPY trades after 12 p.m. Does that mean that price action still can't go higher for the day or lower for the day? No. But you'll start to see price start to range. It'll go static for a while, which I like to trade with the bulk of volume being pushed into the market. And the only way that I can do that, or the only probable way I can do that, is trading in between a specified time based off of my statistics. So going back to the trade idea, I'm looking for long trades. We get a break above Asian range high. We break previous day's high here in the Asian range, which this green shaded background right here, this shows me the London session, and this blue shaded background shows me the New York session. It keeps everything very unilateral for me. So this is how I know that this is in the Asian range, because there's no shaded background for me. So I'm able to easily just look at the levels and kind of determine which one is a swing high, which one is a swing low. So we break above Asian range high here. So then the next thing I'll be looking for is for price action to trade down into the anchor VWAP that I set at the beginning of the day to give me a discounted price entry. We fill a bullish gap. Go ahead and take this off for you guys. We fill a bullish gap. So then at that point, I'm going down to the 1 minute and I'm looking for bullish divergence. Price action is going down. The RSI oscillator is going up. We do get bullish divergence. But the next main thing, like I said, that I'm looking for are bullish breaks of structure. And like I said, as we get to 12 p.m. where I'm off the charts, using my trader's discretion and not to have FOMO just because I've been sitting at the desk for almost 3 hours now. That's just the name of the game, right? I'm comfortable with sitting at my desk from 7:30, being prepared to trade at 8:30, and not having an entry all the way up until 11:30, 12 p.m. By that time, I'm going to make a decision, because this is my business. Trading is a business. Because this is my business and I don't feel comfortable trading into a certain time that I know that I'm going to be getting off the charts, I'm not just going to risk money just because I want to make money for the day. The motivation is to make money, but the second motivation is to be sustainable making that money. So just throwing a little bit of sauce out there for y'all. So the next thing that I'll be looking for, we get the divergence, but then I'd be looking for a break of structure as price is coming down to fill these bullish gaps in the market. Just to kind of give you guys more of a clue of what I'm talking about. I'd be looking for price to break that structure with my stop loss at the low of day. Just give you guys more of a visual. Looking for 1R. Now, like I said, I could stay at the desk till 12 p.m. and still kind of find a trade in between now and the time that I'm supposed to get off the actual markets and just go and do something else. But like I said, there's no reason for me to force a trade if I know that most of my entries come earlier in the morning around 8:30, 9:30, and I'm in the trades and I'm out the trades. There's no reason for me to still sit here and to trade into a time period, like I said, that I'm going to be getting off the markets. I'm not going to do it. So just to make sure that I'm keeping myself accountable, I'm still going to mark it up, meaning I'm on TradingView. I'm going to mark it up as if I was going to trade it, and I'm going to set an alarm to see if price action does break that range. I'm not going to get into the trade. I'm already up for about 2 wins this week already. I'm not in any rush to give that money back to the markets. So that's another thing that I'm going to talk about later on is trader's discretion. Mind you, I know that most of you are pretty new to this whole trading thing, but this is my way on trying to break this down for you guys. I'm gonna go to USDJPY. It's gonna be the last pair that I'm gonna go over for today. Same thing. Looking at my daily bias, price actions above my daily anchor VWAP, so I'm looking for long entries. The next thing that I'm looking at are bullish breaks of structure that we get here. Let me try to annotate this for you. So we get a break of structure at their Asian range high and previous day's high. The next thing that I'm looking at is a retracement to a gap in the market, a gap to the anchor VWAP set on the 15-minute time frame for the day, and then I'm moving down to the 1 minute. Now we get the makings of 1 minute divergence, price action going down, but the oscillator continues to make a lower low. So rather than my RSI going higher, price action going lower, creating a probable divergence, we don't really get an active entry. So price action is going down, but my RSI is also going down. It doesn't create a 1 minute divergence for me to trade from. Now, does that mean that price action still is not gonna move higher for the day? No, but because I have a strategy, I have an edge, I want to stick to that edge and make sure that even if I win or lose, I traded that strategy to its full capacity based off of my statistics and based off of my back tested data. So I'm not even going to mark this up. Like I said, it doesn't correlate to how I get into the markets. I'm going to watch this and see if it does go up, but I'm not going to end up seeing, where breaks of structure is, getting FOMO, fear of missing out, because I didn't get into any trades today. So that's another thing that most traders typically don't get over, because most people want to get into this market to make money. But I want to kind of switch your mindset from, yes, making money, but how can you do this sustainably without making it look like it's gambling? That's the only way that I've been able to kind of do this for a couple of years now. And as I'm going into this new year, trying to keep myself more accountable to my actual trading strategy and making sure that I'm marking these trades up, I'm learning these trades, and I'm getting more added information, more statistics on what's better, how can I improve myself as a trader. So that's pretty much it. I hope you guys like this video. More trade breakdowns will be coming soon. Thank you for your time.